And Man Group has announced a partnership with Anthropic to use the AI startup suite of enterprise tools. The UK hedge fund said it will solve a specific challenge in integrating artificial intelligence models into its processes. The announcement comes a week after Anthropic unveiled its latest Claude Cowork AI agent, designed to handle complex professional workflows, sparking a sell-off in global software and data provider stocks. Now, Arjun spoke to Anthropic's Chief Commercial Officer, Paul Smith, who outlined what the company will provide to Man Group.
They're starting to basically take, if you imagine the amount of incredible raw data that they have, they're starting to combine that with some of our most intelligent models like Opus to really just look for signal in that data. And in addition, they're also going to be using Claude Code and Cowork to really kind of massively amplify what their engineering team is able to do and what their research teams are able to do, what everyone in the firm is able to do.
So Arjun Kharpal joins us now. Arjun, great interview. Man Group now integrating Anthropic's AI tool. Of course, there's been so much talk about Claude. How are they actually going to be integrating this new Claude offering? Is it going to be replacing professional work or kind of augmenting existing functions? And in kind of what kind of work will it be applied to?
Yeah, that's a great question, because a lot of this deal is around Claude and those key softwares, Claude Code, Cowork as well, which of course was responsible for the initial big software sell-off that we saw. The two companies are going to work together to effectively also make custom made AI processes specifically for Man Group around their work they do in terms of using all of their data. So it's going to be interesting to see, but it's a key example of the way Anthropic is very much going after the enterprise here with its tools. But it also shows that there are a lot of companies now thinking about how to integrate AI, and I think your question's a good one. Will it augment workers? Are Man Group looking to replace huge swathes of their current software stack? That's a question I put to Paul Smith, the Chief Commercial Officer at Anthropic. Let's listen in.
What we started to see towards the end of last year and over the Christmas period were a number of people who were using Claude Code for non-coding tasks, for effectively performing some like personal workflows, for stringing together a whole series of tasks, for doing deep research, analysis, content creation, and so forth. And one of the things that kept coming up is, I love using Claude Code for this kind of stuff, but I wish it had something other than a command line interface as the way that I engage with it. So Cowork, you could almost think of as like Claude Code for non-coders. So we released it at the start of the year in response to that user demand. But first and foremost, we're a platform company. So we make all of this capability available for other organizations to build on top of as well. So if you look at what we did at the beginning of last week, and we announced these legal plugins inside of Cowork. Now, we use some of those plugins internally for how we manage legal work. We see some of our clients using them as well. But we also made them available on our API at the same time as well. So if you're a specialized AI company or specialized legal firm building things on top, you're able to take those same plugins, kind of like a reference architecture, and build on top of it. So everything we do is really ultimately available to amplify what other people are able to do and build on top of as well.
But when you speak to organizations like Man Group, for example, and some of the other enterprises you work with, how much of the conversation is, hey, we love your products, we think actually we'd like to use that so we can phase out software we're using in X area, whether that's customer service, whether that's HR, whether that's legal?
It depends on which organization you speak to. And what we typically find is there are some organizations which are doubling down on certain software categories and on certain products, and there are other organizations where they're going, you know what, that is more peripheral to what our core business is, so maybe we will use some other tools to do something different. So it really does depend on what you're doing as a particular company and where your particular focus is.
So this sort of broader meltdown we've seen in software stocks, for example, as a result of kind of the successes of Cowork, do you think that's overblown to some extent?
I mean, I think there was a lot of hyperbole in the market last week, and as a lot of folks pointed out, those applications perform some very important tasks in an enterprise. They have some very specific data models. They have some very specific workflows that organizations are going to get a lot of value from a very long time. What I absolutely see is people innovating way more quickly on top of them than ever before and extending them in like personalized, customized ways than ever before. So in my enterprise, I can say, hey, I want to see the data like this and I want to see this information here. Claude Code, can you do all this from me? And it'll be taking data from CRM, from customer service, from various other sources. So I see it kind of coming together like that.
That was Paul Smith there from Anthropic. One of the interesting things there, Ritika, was what he spoke about hyperbole in the markets, was how he described it. And just reading between the lines a little bit about how he sees software sort of going into the enterprise. He was sort of saying some companies are doubling down on the software they have and some are also looking at tools like Anthropic. So it's still going to be this moving sort of part as to how much can AI do, and that's going to be a continued debate for the market. The second story you brought up earlier, which was interesting, was about Alphabet's big debt deal. This is to fund more of the AI rollout, and of course, capex has been a huge focus for markets. We heard 185 billion thrown around by Alphabet, 200 billion by Amazon. These are huge figures. What we haven't heard is those same kind of commitments from, say, Anthropic, those massive deals on commitments. They've spent about 50 billion committed to build US data centers. But right now, they're relying on a lot of compute from the likes of Microsoft, from Amazon, and from Google as well. In contrast, its rival OpenAI has committed to, I think, more than $1 trillion worth of infrastructure deals. And we keep hearing from all these companies that we need more computing power to meet the demand. So I asked Paul Smith a little bit about how Anthropic is approaching capex. Let's listen in.
We've made less flashy headlines than some, and we've been focused on growing revenue and winning business rather than spending money and announcing the biggest compute deals that we possibly could. It's why we've gone from 1,000 business customers to 300,000 business customers in the last 12 months. But the thing I'm very comfortable with is if you look at our multi-chip strategy, the fact that we've got a very close, successful and productive relationship with AWS around Trainium, the fact that we have a great relationship with Google, with GCP around their TPU chips, and the fact we also now have a great relationship with Microsoft and NVIDIA around Azure Foundry and GPUs. So as the AI platform that's able to actually drive incredible performance across all those three different chip types, it means that we're able to effectively scale ourselves without necessarily being tied to a particular chip. And so, we announced some fairly significant deals last year. We've got more to announce. We're pretty comfortable with where we are from a chip supply perspective. We might not shout about it from the rooftops as much, but we're comfortable with what we need and what we see on the short-term horizon that we're going to be announcing as well.
And how much of what you're announcing is going to be own built infrastructure operated versus compute from the hyperscalers?
So the hyperscaler relationships to us are super, super, super important. And as you saw some of our announcements last year, we will sometimes accelerate those relationships by doing some kind of creative things in conjunction with the hyperscalers as well to just basically expand the capacity even faster.
We just came off the back of US big tech earnings seasons. We had huge capex numbers, 200 billion from Amazon, 185 billion on the top end from Google. Are these spending commitments this year too much, given the jump we've seen from 2025?
So look, I can only talk to our own spending commitments. And it is a topic of discussion every single day, every single week in our leadership team meeting in terms of, are we buying enough compute? Are we buying too much compute? Are we buying just the right amount of compute? Too little, bad, too much, not great either. Because the last thing we want to do is not be able to satisfy the demand that we are seeing. So this isn't us, buying ahead of demand. This is like incredible growth in Claude Code, incredible growth in co-work, incredible growth in enterprise business overall that we absolutely need to satisfy.